Hey guys, it's Nick, and in this video I want to talk about the big down day in the market today and point out some things that is pretty interesting about the market, what's different today compared to some other big down days, and take a look at the ARK ETF. What's in that ETF? Why is it dropping so much? It's down about $4 today, or about 4%. And take a look at the charts of some of the, or all of the stocks in the ARK ETF, to see if they look like there's something that might come back, or there's something that's kind of just melting away and doesn't have a lot of chance of coming back for the majority of stocks. So here's a chart of the QQQ, the NASDAQ 100. It's a 15-minute chart, and you see it gap down today and just went right down to S2 support below the pivot and just bounced around that line. And anytime it tried to have a little bit of a rally, it got stopped here at the VWAP, the volume weighted average price of the day. And so it just bounced around there until at the end of the day, it just kind of broke through there for a little bit. As for the S&P 500, it also gapped down. This is the SPY 15 minutes. And you see it went down to that S2 line pretty quickly and bounced around there and then just started dropping. So during the day, it was down only about 1%, while the NASDAQ was down about 2.5%, and then it seemed to have really accelerated down. And these are supposed to be the more less risky, less volatile kind of stocks in here. Very surprising. And so what was surprising today about the S&P and the NASDAQ is there was no real attempt at a save in the market. A lot of times people see the so-called 330 rally and they kind of label it the Plunge Protection Team coming into the market, meaning the Fed coming in and buying up futures to boost the market up on a big down day. And we didn't see that today, which is very surprising. And I'm sure it surprised a lot of people, and that's why the down the down candle accelerated in the last 15 minutes of the market. People probably couldn't believe that there was even no attempt at a 330 rally today. And so if you don't know what the Plunge Protection Team is, it's the name given to the working group in financial markets created in 1998 to provide financial and economic recommendations, blah, blah, blah. But secretly, they've been accused of coming into the market and buying up futures through Goldman Sachs and JP Morgan to boost the market on big down days. Now, that's not supposed to happen. It's supposed to be a free market, and they're not supposed to buy stocks. But Japan's Bank of Japan does it all the time, to the point where investors panic after stocks tumble and the Bank of Japan does not buy ETFs. So in Japan, they've been trained that when the Nikkei tumbles by 2% in the morning session, the Bank of Japan will jump in. And just the other day, Tuesday, they did not. So this may be some foreshadowing of what's going on in our stock market. Who knows? So let's talk about Cathie Wood ARK ETF. I'm not trying to pick on Cathie Wood, but the stocks they have are a lot of these kind of unicorn, change the world kind of no earnings. Don't worry, their growth is great and their story is great, so they will grow into them eventually. And we see that the ARK ETF, I guess the air is coming out of some of these more hyped up names that they hold. And the problem is that she has been selling the kind of more liquid names like Apple that she recently sold to buy more of these names that are very illiquid, and that when the markets do sell and there's no Plunge Protection Team there to boost them up, they could have a really fast, really deep free fall on some of these thinly traded stocks, because the people that hold them, they might be dumping them to buy the more common Apple and Amazon and those kinds of names. And so you see the most hyped corners of the market come unglued. And so the Wolf of Wall Street did this graph here And this is the EV SPAC index. Nikola, QS, Go EV, Ride, all of this stuff, they're down about 57%. And these stocks from their highs are down. Nikola, 87, QuantumScape, 78%, Canoe, 68, Lordstown, you get the idea. And so he also talks about IPOs that were hot that are now down. Zoom, 49%, Uber, 38%, Coinbase, 30%, that kind of thing. And in ARK's case, it's down from 150, above 150, down to about 102 today. And these top stocks that it holds, they're off considerably from their highs. Teladoc down 53% from its high, Tesla down 31%. So what I want to look at here is this is all the holdings in ARK ETF as of today, May 12th. So these 11 stocks make up 50.86% of the current ARK ETF, ARKK. So looking at monthly charts of these, Coin has only been out 2 months and it's already pretty bad. Roku, not too bad, from 500, now it's like 300. Shopify is not doing bad. Spotify is not doing great. Close to 400 now, it's what, 225, not good. Square's not doing too bad. Teladoc, on the other hand, is down from like 300 to 140, so it's cut in half. And Tesla has been going nowhere but kind of drifting down for the last few months. Twilio, not too bad. This thing, Unity Software, is basically a round trip. Started like, what, 60, went up to almost 180, and now it's down to 84. So I can't see this coming back anytime soon. Who knows? Zoom not doing that great either. Had a nice run up, but from 600 now it's like cut in half also. So these are the top 11 stocks that make up ARK ETF. Now let's look at the bottom 50%. All right, and so here's the monthly charts in alphabetical order. These are not looking that great. From $80 to $50, BLI from 110 to, what is it, $39. A lot of these are looking like they've been cut in half. MTLS, $80, now it's $24. Yanovo Holdings, just not doing much. Palantir, seen better days. Generon's a real company and actually looks like it might be turning around here, so at least that's a positive. Proto Labs is looking really bad. Stratasys is looking horrible, from almost $60 to $19. Skills, not much skills here because it was, what, $45, now it's $14. Lending Tree is looking not too good either. So all of these stocks are not looking like they're ready to turn around anytime soon, except for maybe Regeneron. And so why am I pointing out all the stocks in the ARK ETF? Only because they're kind of the poster boy for the story stock, and valuation does not matter, sales do not matter, earnings do not matter, as long as the story is good and Cathie Wood or somebody is out pushing it on CNBC, then that's all people need to buy the stock. But this is the QQQ on a monthly chart, and it's not far off of all-time highs. And there's a lot of air between here and 50-month moving average. Not saying we're going to get there anytime soon, but I don't want people to make the mistake to think that, hey, we're almost at all-time highs. All you have to do is buy the dip and we're going to make new highs again. It's guaranteed because it's worked all the other times. So all we have to keep doing is buying it when it's a few percentage points off of the high, and it's going to go back up. The same goes for S&P 500 as well. It just made new highs and now it's off of it just a little bit, and people are panicking that somebody should step in and do something about the market, or you know what I mean? So we're just off this little bit and already there's fear in the markets. Imagine if we dip down, halfway between the top and this moving average line. So guys, what I'm trying to advise you here is that when the air comes out of these hyped up names, they usually go down pretty quickly and don't come back for a long time, especially if the rest of the market is falling as well. So the bigger names, the more blue chip names are going to have more people trying to buy the dip than smaller names. So once they kind of lose the air out of them, that's usually it for a long time for these kinds of names. So if you're in like a ARK ETF or some of these kinds of stocks, don't have all your money in it thinking that just because it went up 100% last year, it's guaranteed to do it again, just because Cathie Wood says 25% gains going out for 5 years and all that. She still gets paid whether the stock goes up or goes down. You don't get paid if the stock goes down if you hold it. I hope you like this video, guys. I'll see you in the next one. Thanks for watching.